There's so much money on the sidelines that every time there's the slightest pullback, it feels like there's a lot of money that comes rushing in. I can't even remember the last time we got a 5% pullback in this market. So if you're waiting for the pullback before you jump in, you've had a very long wait. How long do you think that trend continues?
Well, it certainly won't continue forever, and the market has been incredibly resilient in the face of ongoing geopolitical concerns, China becoming, implementing more regulations. So we certainly have seen some developments that could ultimately cause a 5% pullback. But as you said, there's a lot of cash sitting on the sidelines. It's waiting to buy when things pull back. It's just hard to say what that thing is going to be. But I have to think that if we look out over the next month or so, it could potentially be Fed communication. With the Fed meeting in late September, I think that would be my guess if I had to guess. That it would be the Fed.
I mean, anybody looking for concerns can look to things like the August Dallas Manufacturing Index that came out yesterday. It fell to 9 from 27.3, and the 6-month outlook got slashed in half. Peter Bookvar looked through some of the comments that were pretty interesting. Chemicals manufacturing saying we are having increased difficulty in procurement of raw goods and logistical costs. Someone else saying this is the worst market I've seen since 1975 when it comes to machinery manufacturing. Others saying that they just can't find people to work, and those employees that they do have are getting pushed far too hard. So all of those general concerns out there, is that something that you think catches up, or is this transitory like the Fed thinks?
I think some of this is transitory, especially because supply chains, unfortunately, haven't really felt a lot of relief as we've seen ports shut down in China more recently. So I think that will work itself out eventually, but it continues to be disruptive. The ongoing labor shortages, starting next month, we don't have the supplement to unemployment. A lot of kids will also be back in school, so I think there'll be more reason for more people to go back to work. But that being said, I do think if it does one thing, it makes the Fed stay on hold a little bit longer. So to the extent that the market likes that message, and we'll see what happens with the job report on Friday, if it is a little softer, I don't think it's necessarily going to be a bad thing for the market, because it will view that as a message to the Fed that, hey, don't get ahead of yourself here. And the fact that we continue to have ongoing liquidity will be a positive, I think, for financial markets.
Shepard Smith here. Thanks for watching CNBC on YouTube.